Hi there, welcome to another A2 macro video, and in this session, in this short video, we're going to focus on some of the issues for and against overseas aid as a strategy for supporting growth and development in lower and middle income countries. So really this is a look at aid and development, and of course there are different types of aid. Bilateral aid is from one country to another, for example from the United Kingdom to Afghanistan. Multilateral aid is aid given by more than one country, which then gets pooled together and channeled through international bodies such as the United Nations. Project aid is aid geared to funding and providing specific projects for a donor country. For example, irrigation, education or health investments in low-income nations. Aid can also take the form of technical assistance, including engineering expertise and logistics skills. It can obviously come in the form of humanitarian aid, including emergency disaster relief in the aftermath of tsunamis and earthquakes, floods and droughts. Soft loans count as aid, so a loan made to a country on a concessionary basis, which might involve a lower interest rate or a longer repayment. Tied aid is where aid is tied to using that money to make contracts with suppliers from a donor country. And debt relief, we'll do a separate topic video on debt relief. This is the cancellation, the rescheduling or the refinancing of a country's external debts. The UK is an interesting case in point. We're one of the very few countries to have actually made enshrined in law that we will maintain overseas aid of 0.7% of our gross national income, GNI. And only a handful of countries have met that United Nations target. However, a few years ago there was a major review of our bilateral aid. Aid stopped to China and India. There's no new financial grant aid to India. Financial support to South Africa finished in 2015, and partly because of democratic concerns, some aid to Rwanda, Uganda and Malawi was also suspended. So aid is always changing. This chart is really quite important. It shows the total financial flows going into developing countries. The black line shows overseas development assistance or aid, and in 1990 it was the biggest source of external finance for developing nations. Now it's only the fourth biggest. It's been well overtaken by private debt and equity portfolio flows. It's been significantly overtaken by remittances. We've got a separate topic video on remittances, and crucially foreign direct investment is now far and away the most significant form of external finance for emerging frontier countries, but it's also the most volatile. Aid is the lowest, the smallest source of finance, but also the most stable. This table is from 2015 Human Development Report and shows the countries in 2013 that were most dependent on overseas aid. It's worth taking a couple of examples for your revision notes. Micronesia, nearly 42% of their gross national income came in aid, and countries such as Malawi and Libya, Afghanistan and Kiribati, obviously Palestine, were talking up to a fifth of aid worth a fifth of their national income per year. So although most aid flows to developing countries, the percentage of income that flows to the lowest income countries in aid has remained very high. So for some countries there is clearly a lot of aid dependence. So what are the arguments for aid? What are the economic arguments in support of overseas aid? Well, crucially, aid is a flow. It's an inflow into external flow into developing countries, and that can help to overcome the savings gap. There is the gap between the savings available to fund the investment needed for countries to grow and develop and prosper. And aid can also play a really key role, an important role in stabilising a country in the aftermath of a conflict or in the early stages of disaster recovery. And that's why lots of private sector agencies, including Comic Relief and others, have been set up to try and stimulate that. Project aid, particularly aid that's tested, can also fast forward important investment in critical infrastructure, leading to an increase in capital per worker and therefore higher productivity and higher incomes. That doesn't necessarily have to be enormous capital projects. It could be small, relatively small scale project aid involving a few $100,000 or pounds here and there in particular education or health interventions, or for example small tooling investment schemes for local farmers, irrigation systems, etc. So project aid, I think, increasingly important. We'll come back to that in a second. Long term, a commitment to aid is important for health and education, to build human capital, to address the consequences of malnutrition, and hopefully aid linked to building more democratic and stronger social and political institutions. Aid projects for enterprise, for example, can be quite important. According to some economists who favour aid, well-targeted, effective aid can add perhaps around 0.5% to the growth rate of the poorest countries. And of course, if those countries grow and become lower middle-income nations over time, the aid itself can benefit the donor countries too, in the form of increased trade in goods and services. There are, of course, many critics of aid. So here are some criticisms of overseas development assistance. Firstly, the lack of strong democratic and accountable government. So lots of aid flows can be expropriated and find their way to corrupt individuals and organisations and actually leave the recipient country. There's an argument for saying that a lot of aid in the past, particularly military aid, has helped to finance corruption and has basically locked in and embedded corrupt ruling elites. There's also the issue of government failure, a lack of transparency. You can argue that hundreds of millions of dollars of aid is spent on aid consultants and employing people in non-governmental organisations. People often question, for example, how much of £100 given in aid actually makes it to the most needy and the people who are a recipient of that project aid. How much is lost to administration and red tape and bureaucracy. Third argument is that aid can, in theory, breed a dependency culture. People and organisations and communities can become too dependent on aid. And there's an aid paradox that aid tends to be most effective where it's needed least. That's the case that a lot of aid flows to middle-income countries who perhaps don't necessarily need that aid. And there's an argument saying that things like humanitarian aid, flooding a country with food and other resources in the aftermath of a crisis, can actually lead to a distortion of market forces and perhaps a loss of efficiency, particularly if that aid depresses market prices and reduces the incentive to grow crops and invest in the aftermath of an incident. Some economists are, broadly speaking, positive on aid. Paul Collier has been at the forefront of developing aid projects in the UK, which with DFID, Department for Funding International Development. And Collier argues that although there's been increasing cynicism about aid, some of it amply justified by past donor practices, he argues that in fact the aid effectiveness of each dollar spent is now much higher than it was 15, 20 years ago. So particularly he points to the M-Pesa, the mobile money project, part funded by DFID in Kenya, which has been a game changer in many ways in terms of developing mobile money transfers in that country. Angus Deaton, the Nobel Prize winner in economics, is slightly more critical of aid. He argues that when the conditions for development are met, aid is not required, and when they do not exist, aid is not useful and probably damaging. Deaton's argument is that aid is anti-democratic because it frees local leaders from having to obtain the consent of the governed. Dambisa Moyo is also strongly critical of aid, and she wrote a book called Dead Aid. She argued that aid to Africa needed to stop, and strongly against the aid budgets. Esther Duflo and Amjit Banerjee at the Poverty Action Lab have been at the forefront of what's called smart aid. So they've pioneered the use of randomised controlled trials to see at a very local level what actually happens. So what they're doing is they're testing some aid interventions, for example, immunisation incentives, bed nets for people living in countries affected by malaria. They're testing the interventions but using randomised control groups as part of their trial. And they argue that in fact bottom up aid interventions are more effective than simple top-down aid that's inflicted or imposed on a country from above. They argue that top-down aid is hampered by ideology, ignorance and inertia. In other words, top-down aid can lead to government failure. Now their key point is that randomised tests help, and this is a really key evaluation point I think for an essay, randomised tests help to improve the poverty reduction effectiveness per dollar spent. That is a great phrase to use in an A2 macro essay. Keep in mind, of course, that aid is not the only source of external finance for countries, as we've seen from the previous charts. Increasingly, developing countries are relying more heavily on foreign direct investment, remittances from migrants, and also portfolio capital investment into stocks and bond markets. The key really is how countries can break out of an aid cycle. Many have already done so. Many countries are now essentially, the aid as a share of their GNI is very low, whereas previously it used to be very high. How can you break out of an aid cycle? By finding ways to formalise domestic savings to get households and institutions and companies to save more, perhaps to build up sovereign wealth funds from your exports, by growing alternative financial institutions, including microfinance, by opening up developed country markets for developing countries so they can grow their export sectors. And as we've seen, increasingly remittances from the diaspora, people living and working overseas, have become much more important. So in fact, in many countries now, aid is the least significant source of external finance. Okay, so this has been a short video looking at some of the arguments for and against overseas aid.